Most of the mainstream gurus on YouTube or any social media or anywhere you see on television, they don't really know how buying and selling actually works. All they need is just likes and to sell courses, whatever. Now you know the truth of what buying and selling pressure is. Tell me, what happens if the real buyers who came here, if they give up this zone? But I really must warn you that this next part might blow up on your mind. So only those who are real learners continue watching from here. Welcome back, everyone. I have another action-packed video for you. We're going to discuss a few important topics which you must understand before you trade in the market next week. So the most important topic is this. This is your Nifty weekly time frame. We're going to discuss the landmine trap, right? And this is the plan till the December of this year. Before we discuss the landmine trap, obviously you need to add some color to the conversation. You won't understand, just if I say what is a landmine trap, you won't get it. So we have to understand what the hell happened in Nifty. First, you must understand what the hell happened in Nifty for a 1500 point drop. And we're going to discuss some other important topics like why or if the history will repeat. The September month of last year and September month this year, will history repeat? Then we're going to talk about the structure of the market. Obviously, we're going to talk about time cycle, the update of the big picture. And then finally, towards the end of the video, I am going to tell you my tool, one of the tools which I use to identify traps. So make sure you watch the video towards the end. All right, spotting the trap in Nifty. This happened, I think, on the 26th of September, where I posted a very, very important tweet. This was the time when, everyone in the market was completely brainwashed bullish, right? So this tweet of mine, if you're not following me on Twitter, make sure you do. I have the link in the description. I shared a tweet where I shared the idea and also the trapping zones, how the market was trapping everyone on the rise, right? Price was rising, but there were traps happening. And I said, I am really sorry, but only things I see right now in the market are traps, right? This is what I shared. And this is not the first time. Earlier in the previous video, I told you around the 20th of September, when there was a sharp fall in the market in the afternoon session. Now the 1:30 p.m. operator who was active, the 1:30 p.m. operator who was active started to short the market when the price was rising. Now I know that you want me to tell you what is traps. I know you want to find traps. I know that you want it, so I will show it to you at the end of the video. Keep that in mind. All right, simple, guys. Listen very carefully to what I'm trying to tell you. There's no guru, there's no YouTuber, no subscription, no textbook will teach you this. When there are traps against the main trend in the market. So right now, if you look at the main trend, it's bullish, right? From 25,930, let's take just this example. From here, when there are traps against the main trend, price usually retraces back to these levels. So these traps are what I call landmine traps. Now recall what I tell you. What is the agenda of this video? We're going to discuss the landmine trap in the weekly time frame. But first, we must understand the smaller time frames. So 25,930 is the place where a trap started. One new one. There's another one, which earlier one, which started on 25th September. Sorry, 28th of September, right? Then the next one was on 26th. It started from 25th and went all the way to 26th. That is when, now you must understand that when traps are there against the main trend, nobody's going to tell you this, market will 100% come back and retest that zone. All right. Finding the trap, right? Finding the trap is only the third step. You need to understand current market structure, then time analysis before traps. So let's do that. But I really must warn you that this next part might blow open your mind. So only those who are real learners continue watching from here. Will history repeat? So last year, there was a consolidation before the month of September. You saw a very sharp rise towards the mid of September, 900 points. Those who are following me back then, remember we caught this move also on the upside as well as on the downside. The advanced concept members know what exactly happened because I have recorded the entire video for advanced concept members and told you exactly August 31st what happened. Now, the fall. Immediately there was a pump and there was a dump. Moving on towards the end of September. Looking at the chart of now, September 2024, a similar consolidation happened in the beginning or before the real move in September, a sharp rise of 1500 points, and then we saw a sharp dump of 1500 points again. What happened after that? What happened after that? Question in the September 2023 market structure is very simple. It went into a consolidation mode, right? It went into a consolidation mode. 17th October onwards. So there was a pole and flag type pattern, whatever you want to call it. After that, 17th October onwards, we saw a sharp drop towards the end and we went into your November month, right? November month, we started a nice rally. Question is, will history repeat itself? What do you guys think? I ran a poll in the Telegram group, and most majority of people think history will repeat itself, right? But let me tell you that majority of the people, what they think and what market does is exact opposite. So let's see what happens going forward. But it's very important to note that if some sideways move comes in the market, some sideways to corrective move comes in the market, the key date we have to be alert from is 17th onwards. Now, why 17th onwards? I'll tell you later in the video. Question is, what can cause this new sell off to come in the market? What are the chances? I'll be honest with you, I don't really care about the news flow which is happening and I don't relate it to the market structure. But there's one thing you guys must understand, that flow of money, right? The flow of money, it directly impacts the equity market. So looking at the current geopolitical scenario, the hot topic right now, the hot topic is oil, right? There are latest developments in the war in the Middle East, where there's some reports of nuclear facilities being targeted, governments being cyber attacks, and this could drastically change the impact on the oil price. Correct? Oil is one of the most important commodities which run countries. Countries needed oil, and these are the countries where the entire supply comes from. Now, another side of the story is that there are reports of a gas station explosion in Russia. Recently, also there are, all these unknown events. They add reasons for the big players, the institutional players, where they can choose to exit equity markets and they can go for a safe haven like gold, right? They can also put their money into oil, right? There's a lot of volatility there. They can make more money from there. There's another story, the headline story, which is nothing but your election, the US elections in the November. So this is the election year. So obviously market tend to, try to behave in a volatile manner. So going into November, all this geopolitics and the flow of money, all equity markets along the globe, around the globe, everyone will get affected. So with all this going on, you really need to understand the current structure of Nifty. Looking at the structure right now, what do we have? We have a very good swing which came from 23,800 all the way up to 26,277 and a sharp fall. Now, all those who have studied the Elliot Master Course and those especially in the advanced concept members, what happened here? You can see a fast rise, right? And you can see the equally fast fall in the market. So is this a pump in the market? Correct? So which wave does this pump come in? Pump comes in either possible C wave or some wave 5. If this is some wave 5 and it is very extended, worst case scenario I'm telling you right now, Wave 5 being extended and fully retraced in a very fast manner is a sign of a very good reversal. Now, when does this wave 5 extend? Sometimes when an important high in the market is made, wave 5 does extension like this. All right. So, in the same case, from the low of election, right, the election results of June 4th, from that low, if this is some wave 5 which has been extended, and within that there's another wave 5 which has been extended, there's a good chance, let me tell you, there's a good chance we are going for a very deep correction. We are at least going to match, or we're going to reach this gap zone. You can see this gap here, 24,284 or 24,150 approximately, in that zone. Now again, I'm not just throwing numbers, I'm not just simply randomly drawing these zones. There is a reason for it. By the end of the video, I'm sure you will all understand. Now, simple, what do we need? We need to understand that to understand a higher time frame picture, we need to understand a smaller time frame. So what I always tell my members is you never go into analysis with one view. You need to have another view, alternative view. So the alternative view here is that there's a good chance market might not fall and it decides to go higher from here. Just reverses blindly and it decides to go higher like this, right? So how do we know which one is going to be the correct one, which is not going to be the correct one? That's when you have to study the smaller time frame. That's when you have to study the smaller time frame and understand what's going on there. So let's look at the smaller time frame analysis. Now I've already shared this analysis on Twitter, but I'll just explain it further. This is for the third week of October. Here it's very simple, nothing complicated. The shorter time frame, we saw sharp fall first, and now we are in the approximately touching the third week, right? Mid of October and towards the third week. So what happened here? The previous week, there was an old trap zone. Now, again, what is a trap zone? I'll come to it. You will understand it very clearly later on. Right now, there was an old trap zone and there's a very sharp dump, right? From 25,460 level. This is where all the shorts have their stop loss. This is where all the liquidity is. Now, liquidity is nothing but a pool of area of either limit orders or market, obviously not market orders, limit orders or stop losses. There's a good area chunk, right, of orders there sitting there, doing nothing, just sitting. What happened now is after this fast drop in the market, there was some late shorts who got trapped here. What did the market do? Obviously, it bounced, and exactly near our old trap zone, we saw the second round of dump which came in. I think it was at this point, let me zoom in. It was at this point, these few candles which came in the market, I told in the live market, or approximately post exactly towards the close, I think, that somebody was booking their shorts here in this small candle itself. The next level I marked here was 25,120. So next day morning, what happened? Exactly gap up above these three candles, and then market went a little bit higher. So retailers were shorting the market at this point. Retailers, simple guys. Where there are traps, 90% there are retailers present. Right now, for next week, what I'm going to look for is that this zone, right? This entire zone where I mentioned buyers need to defend. This is a reason of something we call delta, as nothing but the net buyers and sellers combined. After that, what is the net position in that candle or probably area? So net delta highly negative. Okay, at this moment, net delta is highly negative. But the question here is, why is the market not falling? Market is gone sideways almost, right? Market is not falling. This is something which I call absorption. All the shorts are being absorbed slowly. After a fast move, sudden absorption is happening in the market. All right. So it's very simple right now. And towards the end of the video, I think again, you will understand what exactly I'm telling. But right now, as long as price sustains above 25,115, there's a good chance this old trap zone is going to be retested. And as soon as this breaks, right, as soon as the old trap zone breaks, it is definitely going to hit your upper liquidity zone, which is your 25,460. Now, what if these shorts get trapped and these buyers right now, right? These buyers, what happens to them if these buyers break down, right? We'll discuss that later on in the video, but right now, understand that for next week, what I'm going to do is this is my no trade zone, and whatever happens, I'll wait for this to either break on the upside 25,115. I'll show you how 25,115 level came. It's not a random level. And also, this entire zone, if it breaks down, makes a very good opportunity on the downside, right? Very lower levels also open up. Right now, you have understood basically the structure on a higher time frame. You have a smaller time frame structure to look for. So discussing traps, what did I tell you? You need to have price first, then time, and then third part is the traps. So we finish price. Now let's get into the time part. So after looking at the time analysis, we're going to discuss one of the tools which are used to analyze traps. I'm going to show you with examples. So make sure you watch it till the end. For those of you who have watched the big picture, this is the first video where I discussed the time zones for the year of 2024. We had one of the time zone of 9th to 11th. Has to be 9th to 12th September actually. Just change it. So the first time zone was 9th to 12th September. So what is the expectation of that? The normal cycle. Now the normal cycle and inversion cycle, I've explained this so many times, but I'll just repeat it for the new members. The normal cycle is nothing but in a specific time zone. When you study time cycles in a specific time zone, suppose in this case, I'll just take the direct example, 9th to 12th September in a normal cycle was supposed to be a high in the market. All right, what happened in the same time zone, right? In the same time zone, market made an exact low and a big move on the upside, right? So the market, it made a low in the market. So the time zone does not change, exact same, but market does the exact opposite of the normal cycle. This is nothing but time inversion. Okay, this is nothing but time inversion. This is one of the tricks of time. You cannot predict this in advance. So if this happens, then again, if you're smart enough, you will wait for the time zone and watch what happens there. Now, once how I track, I've told you all this in the second update where I gave you, where we discussed the 1:30 p.m. operator, as well as another update of the time cycle where I told you once the inversion starts, we cannot tell for guarantee that the next move will be normal cycle or inversion cycle. So what I do is I wait towards the time zone. I see the price action, what is happening in that time zone. So in that time, I told you one thing. If I wanted to see 9th and 11th October, if I wanted to see a low in this time zone, very simple. It can be a higher low, lower low, does not matter. Let me just show you that clip again into 11th. If in case, like that's how I decode it. If this is going to be a high, then I want to see a low here. Keep that in mind. Now, if this is going to be a low in the market, right? If this is going to be a low in the market, this is time zone, then I want to see a high made here, 26th to 7th October. In this zone, I want to see a high made here. Very simple. So, very simple. We saw the high on 26th September, right? In this time zone, we saw a high and we saw a very good fall in the market. So 9th to 11th October, if we wanted some kind of a low in the market, then we got the high here. But question you can ask me, sir, we don't know, is this a high made or is this, maybe a low also can be made here and then small high here and then market might fall, correct? So again, that comes back to the price analysis. We'll find this answer next week only. No one can tell you that in advance. But if you take my opinion, then I'm watching this zone here properly and I'm seeing what happens at least on 14th and 15th October, and definitely there's going to be some move which is going to come in the market. The next date I'll tell you which is an important date, but for now, try to understand this. Time analysis has told us that we are in a very, very critical part of the market, right? So we got a good move on 26th to 7th October, done. Now 9th to 11th October, we wanted a swing low. If we want a swing low, then we should take this as a high. But right now the market is dicey because it closed exactly between a big swing, right? It's in the middle and it's gone sideways. So it's an incomplete move, in my opinion. Right now, the market is incomplete move. So 14th and 15th, we will get the clearer picture. What is the next date? What is the next date? So the next date comes around your 21st, 21st to 22nd. You just mark it. 21st to 22nd October is the next important time zone for this month. 21st to 22nd October. So you can note it down. Now, here is the game, real game. What you're going to do is, personally, I'm not going to make any predictions here because, first reason, a lot of time inversions, and you don't want to get it wrong now itself, right? So, when I told you, when the first inversion starts, right, in September itself, I choose to play each and every time zone separately. Separately, meaning let the price come here, then we'll see. Like what happened here. Let the price start here. We identify the trap zone. We expected the fall, and I think I had some fun also on Twitter, where I told you I sold my car and started buying Nifty puts. Those who are following me on Telegram, I think the October month futures shorts, I've shared the update there. All right. So yeah, 21st and 22nd October, the next important date. So you have a very simple knowledge about the structure of the market, what we're going to expect next week, the important zones, you have the price structure, you have the time analysis. Now you have important dates. What you're going to do is you're going to wait and watch till here. Okay, before you make any major decision in the market, my own humble request is wait and watch, don't get excited. Yes, 14th and 15th, we will watch the levels and the Underground Traders group, or I'll update it on the Twitter, right? My Twitter account. You can join there or you can subscribe there, whatever. It's completely free. And sometimes I do have fun there. So don't take everything so seriously. Simple, guys. Price is time is over. Now let's get into the traps. Most of the mainstream gurus on YouTube or any social media or anywhere you see on television, they don't really know how buying and selling actually works. All they need is just likes and to sell courses, whatever. So let me show you how it really happens. And trust me, you will have a different opinion of the market after you watch this. So the tool which I'm going to use is called fixed range volume profile. All right. Fixed range, fixed range volume profile, FRVP, is a very niche sort of analysis method where people don't really know about this. So let me just show you how it works first. Right now, we have a swing. This is the chart of DLF. And why did I choose DLF? Especially for the Underground Traders group members, the private group members, you must take note. This is your time zone, the weekly time zone which we had. I showed you this reaction also. We tracked this in the live market, right? I gave you the trap zones, everything fine. Now watch what I'm going to tell you and listen to this very carefully. All right. The fixed range. This is one of the tools which I use. The fixed range volume profile. When you select it from TradingView, it's there available here in this, right? Over here, you can select the fixed range tool. And I'm not going to teach you the tool. First, watch what I'm going to tell you. Okay, watch it. I've selected just a range before the time zone, how I apply it. Before the time zone, right? Before the time zone starts, I'm just applying this tool here. The range started from the low to this point here. All right. So what do I see? You can see there's so many colors here and some important zones. Some of you might know this, some of you don't know this. Don't worry about it. Not now. First, understand what I'm trying to tell you. You can see that first mind blowing part is the market was falling down, correct? Okay. Note this point. The market at this point was falling. This is the chart of DLF, 15-minute chart of previous week. Okay. Done. Now, when I put the volume profile, the fixed range volume profile, the tool, what is it telling me? This is red. Now, again, these are my personal settings. I'll share them in time. I'll tell you what are the important settings. I'll tell you how to do it now. If you see towards the low, swing low, what happened was at the swing low, there was some buying pressure. The green ones, the cyan color, whatever you want to call it, buying pressure. All right. There was huge red here, huge red, selling pressure. But how? Right? If the low is to be made, then there has to be buying pressure, correct? That is what everyone thinks. This is the general idea that everyone thinks. If there is a low made, there has to be what? Buying pressure. What is it telling you? The fixed range volume profile, what is it exactly telling you? No, there's high selling pressure at the bottom. Let me take it off. You'll see for yourself. There is high selling pressure at the bottom. Okay. Now, let me tell you, this is what I'm telling you. You have to keep an open mind. Everything you know is going to go through the window right now. There is high selling pressure happening here. Only at this point, what does the price do? It forms a swing low and rallies. What does the price do? It forms a swing low and it rallies. What do you think? What should happen? When buying pressure comes, only market should go up, right? No, that is not happening. This is the actual reason of how market works. High selling pressure comes here and market reverses. So this becomes a massive trap zone. All right. This becomes a massive trap zone where all the late shorts are trapped. So far, you have just heard in social media of or some analyst or some person saying, okay, shorts are trapped here. Okay, this level broke. I'm showing it to you live. Look at the chart. It's charts speaking to you. There's shorts who got trapped here. All right, note that. Let's go back to our tool. Let me put it before the time zone. What happened? Next, price is going good. Before the time zone, what are we seeing? Price is going sideways. But what is happening here? This purple part. This is again the coloring, why the reason coloring, all that another time. But right now, try to understand that there's huge amount of shorts happening here. There is a huge amount of shorts in the market. And what is the price doing? It is going sideways. So shorts are entering the market. So where did the shorts enter here first? At this point. Did the market fall? No, it reversed. Next part. The shorts are entering at this point. Okay, so you're saying shorts entering on top right now. It should fall, right? But what is the price doing? So shorts are entering, but price is not falling. It's going sideways. So what does this mean? The shorts are getting absorbed. Shorts are getting absorbed in the market, right? Somebody is buying up the shorts. There's huge selling pressure, but price is not going up, not going down. It should what immediately when the selling pressure, it should go down. That is what everyone tells, right? Selling pressure, market came, FI sold, so and so party sold, some FIDI, somebody sold, market should go down. No. Now you understand why the FI figures, DII figures are useless for you. Completely useless. Don't worry, this is just the start. Now watch this. During the time zone, there are three candles form. Let me go to a smaller time frame. We have zone marked, right? Take this off. During the time zone, what happens? Let's see. We put the tool here. Okay. So in this time zone, we see a sudden sharp spike in the market. Sudden sharp spike. And what do you see? What do you see just based on this purple area, right? The entire purple area. Let me just here just this once again. So the entire purple area is where shorts are entering the market. There was a sharp pump in the market and shorts have entered at this point, close by. All right. And beyond this point, what do you see? Now let me go to higher time frame, it'll be clear. Yeah. Beyond this point on a 15-minute chart, what do you see? Only buyers, pure buying, or those who missed the move or whatever. Only buyers are entering the market above this point. Only buyers. Understood? What did the price do? Look at the price. It formed a reversal doji pattern. It formed a reversal doji pattern. So does this mean should I short the market? No. we have an important level here, right? So if the market has a pump, so price, important, remember, price structure, time zone, we have a trap zone. Underground Traders Group, I hope you're seeing something different right now, right? From the daily videos which I tell you, you're seeing something different right now. There's a trap happening live. What is the narrative which you guys have learned so far? If buying pressure comes, market should go up. If selling pressure comes, market should go down. No, something different is happening. This is what I'm trying to show you. Here, there's huge amount of selling happening. So what do I need to do? I just need to wait for the price to come below it, right? I just need the price to start trading below it. That's it. What do I need? Now, Underground Traders Group, you can definitely go back and check what is the trap zone I gave you and the GAN angle which I shared with you, right? Try to understand. I told you this zone in the LF was important, this stock. Let's take another example. Let me just show you another stock of last week. I think it was MGL. Okay, so MGL, what happened? We were tracking this stock in the Underground Traders Group. Simple, flat pattern happened here, but we don't know. So before the time zone, I'm using my tool, applying it before the time zone. What do I see? I see that there's a lot of transaction happening. Let me just show you before the time zone. Yeah, this is one swing. There's another swing like this. All right. So again, if I'm watching this swing, I'm seeing that there are heavy shots in the market at this point. There's here, 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 right? Here, buyers are there. What happened to the market? It fell. So buyers are trapped. At this point where the market reversed, there are heavy shots in the market. What did price do in the upper zone? It paused. Correct? Price paused in the upper zone. At this point, shorts are there. Shorts got trapped in the market. But textbook, what does the textbook say? If selling pressure comes, market should go down, right? Market should go down, selling pressure. But what I'm showing you right now is exactly what is happening, exact opposite. When the selling pressure has come, only then the market has reversed. Correct? So who is selling here? Just by logic, try to understand who is sold here, the retailers. Very simple logic, not complicated. So now let's go down to a smaller time frame and see what happens. This entire zone, draw your tool. I've drawn my tool. I have this uh, zone also with me where the sellers were trapped. If I take this tool, very simple for me, I can see what heavy buying pressure happening here. Okay, heavy buying pressure in this zone alone. This is before the time zone. Everything I'm talking about before the time zone, not after the time zone. Before the time zone, let me just mark it for you. It'll be more clear. This entire zone is buyers. Okay, dark blue. Let me take it off. It'll be clear. Entire zone is buyers before the time zone. So we understood that. What did I tell you? What did I do in the market for the Underground Traders Group members? Remember when I told you that this was some lower time zone, very small time zone. I gave you a trap zone here, market bounce. But when it broke down, I told you I took puts home. Correct? I told you I took overnight puts. As soon as the market next day morning it gapped up. So now what we're going to do is we're going to see the entire range of this. So here you see a small blue color, meaning there are longs sitting here. When they broke down, right? I think I gave you this trap zone. It was somewhere here. When it broke down, I told you I took shorts home. But next day morning, as soon as it gapped up, you see this part here and this blue cyan. The bulls have entered at this point. Next day morning gap up, I told you I had to immediately shift to a call option and then price rocket. It went straight up. right? Straight up rocket, right? So very simple. This is a shorter time frame. On a higher time frame, all this is happening in an area where the shorts are trapped. I hope this is quite clear. And now let's leave all this. Let's get into Nifty. All right, let's get into Nifty and let's put up our tool there and see where are the trap zones and what we can understand. So Nifty's chart right now, simple, recent swing 25,485, sharp drop which came from there, right? So let me just put up the tool towards the low. Simple, guys, very simple as you see it. At the lows, what happened? Heavy selling pressure came in. Okay, heavy selling pressure came. Now look at the tweet which I shared with you. What is the image? What did I tell you? That late shorts area. This is where the late shorts were trapped, right? So this is the area. You understand now? Somewhere here, the late shorts were trapped. You see the red, everywhere red. What did the market do? It reversed immediately. Advanced concept members, slowly, there's something new for you guys also. You understand how to identify the structure. After identifying the structure, you know how to identify time. Now, after identifying time, I've taught you multi-time frame, not price analysis. That is okay. Multi-time frame time analysis, right? Now, imagine you use this tool to understand what exactly is happening. Okay, so here, Nifty late shorts got trapped. This is the analysis which I gave you, right, for the next week. Next, as the price moved higher, let's take this off. Price moved higher, right? So the first thing you understood, when there is sudden excess buying or selling pressure, market is reversing from there, not going in that favor. It's reversing from there. All right. Again, don't worry. We'll show you in the weekly time frame. I'll show you. Don't worry. Right now, watch this. Market rose. Okay. Market went higher from here. In this leg, of the move, let me just draw these vertical lines so it'll be clear for you. This is one leg. Oh, don't worry, I'm not going to make it complicated. Simple. One leg, one side of the move, one half. You see that? Let me draw it again. So from here to here, what is your analysis? Late shorts got trapped here. Done. Next, from the next part, next bit, what do you see? You see that bulls have entered this point somewhere. Bullish trades happened. There is some bearishness which came here in the market, which got eaten up. It went higher. And then the bulls came, market reversed. Okay, done. What else can you see here? You can see there's a heavy buying zone happening all the way in this zone, right? A lot of blue here. Now, why blue? What blue? Colors, settings, variation, dynamic settings, all that. We'll talk about it. There's a lot of blue. So what I'm going to do is I'm going to mark this zone. For me, it's important, right? For me, it's important. I understand there are buyers who stepped in this part. In this part, buyers stepped in here. It is overlapping with what? It is overlapping with the area where shorts got trapped. Very strong zone then for me. Okay, done. Now, I'll ask you one simple question. Now you know the truth of what buying and selling pressure is. Tell me what happens if the real buyers who came here, if they give up this zone. What do you think is going to happen? Okay, you understood that now. Very simple. Going to the next part. What else did I tell you in the weekly time frame analysis? That this zone must be defended by bulls so that market can go higher. If the bulls cannot sustain the zone, what level did I give you? 25,015, right? 25,015. 25,015. Now let's look at that zone. How did I get it? Drawing this, what do I get? this swing, the recent swing before the next week starts. It's very close to this. I think it's 25,018. I just rounded it off to 25,015. You can take 18, 15, not a big deal. Okay. 3 points. What happens here? What is happening? There is excess shorts sitting at this point. There is, you can see from your own charts, there is some excessive shorts in this entire move. My only question to you is, look at the shorts over here. Okay. Look at the shorts over here and look at the shorts over here and this zone. Use your logic. Come on. When, what did I tell you? Excess of one side happens, shorts or longs, what market generally tends to do. That is one concept. Another concept is the start of a new move, if it does not happen with good strength of whatever. Suppose this is bearish. This is a bearish move, right? The start of the new move, if it does not happen with good bearish strength. So now this is actually what? A three-part move. So what is a three-part move? Come on, those who have studied the Elliot Wave Master Course, a three-part move, ABC, right? Let me just divide this again to three parts. This is one part here, two parts here, and three. So let's take the down moves only for now. This is not complicated, guys. Very simple. Now, do you understand why 25,015 was selected here at this point? The shorts which came in the market recently are in this sort of an ABC or whatever corrective move this is. The most recent in this leg, they're sitting over here. The shorts are sitting in here 25,015 level. So what was the analysis which I gave you? That I will be watching this level 25,015. If the market goes above it, where is it going to go first? It is going to go to the old trap zone where there was weak selling which came from here, right? There was weak selling. If market breaks this, that is where it is going next. Before that, I told you the most recent sell-off which came was from this level, right? The trap which I told you in the towards the close, that sudden trap was there, and I drew one single line near your 25,120 level. This is not 120. 1 second. Yeah. What happened here? If I just slowly go inside deeper, you'll see that in this swing down, the final traps came here where the retail started to sell. Now look at the selling pressure here. Absolutely gone, right? This big candle, but the last candle, what happened? No selling pressure. What should happen? Selling pressure should increase, right? If it's actually a bearish move, selling pressure should increase. Here at this point, bulls tried to push up the market and they got trapped here. So this is what an old in a smaller time frame. This is a landmine trap. Landmine trap is what? Nothing but your old trap zone. So next day, what market does? It comes here, retest this part, goes back down. Okay. So I hope you're grasping my concepts, which I'm trying to teach you. And this is what is a smaller example, smaller time frame. Everything is happening in a smaller time frame. Let's go to our main topic of this entire video, which is your weekly trap. The trap which is set on your weekly chart. So before we go to the weekly chart, let's quickly discuss the daily chart. What is the swing do you see here? Do you see a swing in the market? Yes. What swing? Upswing, right? And a downswing. Within the upswing, I think it's very clear that by now there are 5 parts and you understood the price structure. You know the time analysis. Now we're just talking about just traps. I'm drawing the tool here with my settings and I'm putting it over this entire swing. I'm not dividing it. I'm putting it over the entire swing just to give you a brief understanding. In this swing, what do you see? You see that this zone was high in selling pressure. So where in the previous part, so it's right now we're only discussing this part, right? From this So it does not matter. The recent price action does not matter to us, right? Let's see this fall first. I'm drawing the highest selling pressure happening here. Highest, correct? Highest selling pressure. I'm removing this tool. Watch this. Highest selling pressure comes here. And what did the market do? It made a bottom. Trust me, guys, everything you know about how buying and selling works is completely false. And the entire mainstream public has no idea. If you understand what I'm trying to tell you, definitely do give me a like and comment that what you have understood is something new for you. All right. Watch this, guys. Very simple. Highest selling pressure. What did the market do? It made a major swing low. Who got trapped here? What do you think? Who got trapped? Major retailers got trapped here, right? Major selling pressure which came here. Okay, now let's see the next part. Next part is within this time zone, there was another bit of selling which came here. All right, understood? Another bit of selling. And here in this zone was another selling area. Okay, which started from this point. Another selling area. High selling area. What did the market do? Reversed. Correct? Market reversed, went higher. Now, the top 26th onwards. Now, forget what I'm trying to tell you. Listen to the time analysis. What is the time analysis which I told you? Shorter time frame from 25,900. There was a trap. That done. Next, 26th to 7th, important time zone for us. We have time, we have price. What happened in this tool which is telling us? Heavy in this long move, heavy bulls have entered, especially at the top. Heavy bulls have entered. And what did the market do? What did the market do? Simple reversal. Now the fast fall which came, that is because of the price structure, all that you already learned in the Elliot master course, but try to understand this part. The reversal in the market happened when there is excessive one-sided move. It is not the buying pressure which is moving the market up. It is the buying pressure which is triggering the reversals in the market. Try to understand that. Okay. It is the buying pressure at this point which triggered the reversal. It is the selling pressure at the bottom which is triggering the buy trends, longs in the market. It's completely opposite to what you have learned so far, right? Right now, looking at this structure, you see that this entire zone is a land mine trap. Weekly chart, let's go. So this entire zone, now we're talking weekly time frame. So one candle is 1 week, right? So this is where the last time shorts were trapped. Okay. This is where the last time shorts were trapped. What did I tell you? Market in the price analysis. What did I tell you? If the market wanted to break this zone, if market breaks this zone, where is the next zone? Where is the next traps happening? And the next traps is down here. Next traps are down here, right? So in this, you can see there's a gap. I told you by end of this video, you'll understand what exactly I was telling for the gap. Okay, let me take this off. Take this off. I told you if this zone breaks, there's a good chance we can reach this gap. Now, what is that gap? From where did it come? Why is it important? All right, shorts were trapped there. So for now, market is over here. What did I tell you? The landmine trap, but it's on a weekly time frame. All right, it's on a weekly time frame. This landmine trap, if the market sustains, now, what did you understand? It can reverse from here. Market can go up again, right? Market can go up again. Very simple. Let me take you down to a shorter time frame, daily chart. We did not put the tool at this point, right? We did not put this. Now we'll do that. Okay, we're doing this. Let me see which is the best time frame to explain it to you. All right. So right now, there is some bit of selling in this entire drop. The highest selling came here, right? Highest selling came here, understood. I understood that market falls here. There is some bit of high selling came here in the market and it went bit higher, little bit. But shorter time frame, I told you it's not over. That's why the market fell. Another high selling point here. Okay. If the market, real bulls entered this market in this point, if the real bulls entered, not, it's actually till here. Let me just mark it all the way and it will be much clearer for you. Now better. This entire zone. Now do you understand why in the weekly time frame I've mentioned this is the area where bulls must protect? If they don't protect, what is going to happen? You know that. So in this entire fall, okay, why is the market not going higher? Why is the market not going higher? If you know the bulls are here so far, something called absorption is happening. At these levels, you see shorts are sitting. At these levels, there are shorts sitting. And at this point, there are bulls sitting right under them. Trap happened here. I showed you this. Now, very simple. When the shorts are getting absorbed in the market waits. It waits slowly. And then if it decides to trigger the move on the upside, what level did we have? 25,015 on a smaller time frame. So we know what to expect. This is the areas where the shorts are sitting, right? By chance, the market goes and sustains above it. You tell me where it is going to go. There is a gap open on top here. You understand now? Very simple. All right. So now, guys, I've explained it in a lot of detail and you know the price structure along with the time analysis. This tool, right? This tool for you is going to be very, very helpful and its purpose is completely different. So if you really want to learn this tool from me, you know what to do, right? We are a growing family of Retail Army. We have suddenly spiked and reached 800 subscribers. I don't know how, but it's because of your interest in learning. That is why I am sharing all this. I'm going to share this tool for exact free. I don't want to charge anything for it. It'll be on YouTube. All of you can use it. All right. So you know what to do, right? It is on you now to decide whether you want to pay for this or you want it for free. For free, you know what to do. I've told you many times. So the first step for you to understand traps, I've told you this before again in this video, that you have to understand your price structure, then comes time, right? Price, then time. The third step is your traps. So before I leave you with this ideas in the mind, I want you to especially watch the Elliot Wave Master Course, and then you can also check out the videos on smart money traps, right? There are a couple of videos here where I've discussed different methods of traps. You can check that out if you want to understand trapping better. All right. So I'll see you guys in the next video. Till then, take care and definitely do leave a like and comment if you've understood something new from this video. All right. Thank you guys. I'll see you again.